Hey man, this your boy CJ. Hey, thank you guys for tuning into another episode of Hard Money Hustle. In today's episode, I'm gonna teach you guys exactly what hard money, private money, investors, people who want to lend you money, people who want to give you money, exactly what we look for before we give you money. So make sure you stay tuned. Make sure you watch this episode to the very end. Share this with somebody who need to hear this. Anybody that you know that is thinking about becoming a real estate investor, who is a real estate investor, who is thinking about jumping into space. The most important thing about this space is, where am I going to get the money, right? Where am I going to get the money in order for me to make money and scale my business? I always tell people, if you want to be a real estate investor, you got to treat it like it's a business. You're going to make a lot of money, but you got to treat it like it's a business. And the way that you treat it like it's a business is you make sure you have strategic partners. You make sure you know where the money's going to come in at. You make sure you know how you're going to make your money. And you make sure you buy the right investments. At the end of the day, that's what it comes down to. It's not about nothing else. It's not about fees. It's not about what this person charges. It's not about none of that. It's not about nickel and diamond. It's all about, what did I buy the deal for? I want to give you guys a fun fact. If you are thinking about becoming a real estate investor, or you are a real estate investor, I'm going to give you a fun fact that a lot of investors seem to not understand. You can never buy an asset for too low. You could never buy an asset for too low. Never. Never in the history of real estate investments have I ever heard somebody buy a deal for not enough money, too low. So get that wrapped in your head. Hey, ain't nothing wrong with making lowball offers. There are always going to be more expenses that you might not be prepared for, might not understand, or things can pop up. The lower offer that the seller is willing to accept, the safer the risk, or the lower the risk for you. Let me repeat that. The lower the offer that the seller is willing to accept, the lower the risk is for you as the investor. So, hey, don't be afraid to make the low offer. Don't be afraid to negotiate. Don't be afraid to do your job. Do your job. Don't be afraid to win. That should be the motto of today's video, is don't be afraid to win. There's too many people out here that are afraid to win. They just want to be mediocre. They don't want to win the game. They just don't want to they don't want to lose. They just don't want to lose the game, but they don't want to win. No, play the game to win. Play the game to make a whole lot of money. There is no such thing as buying a deal for too cheap. There is no such thing as having too much money. There's no such thing as having too much resources. There is no such things as these things. So don't be afraid to do that. And the reason that I want to speak on that in today's episode is because we are shifting into a buyer's market. What does that mean? Hey, what the government has been doing has been working. They have been squeezing the economy. They have been raising rates. They have been doing everything in their power to slow inflation, stop inflation, bring it back down to 2%. And guess what? A lot of people are affected by that. There are a lot of people that are going to, if they haven't, they're going to be losing their jobs. They're going to be broke. There are going to be a lot of houses that need to go for sale. And guess what? There's going to be a lot of distressed buyers coming into the market. What does that mean? A distressed buyer is who you're looking for. That is your ideal lead. Some of you guys, I'm talking to my real estate investors, or my people who want to become real estate investors. Some of you guys forget who your target market is. Sometimes I talk to some investors and they just think, I just want to make as many offers as I can. You're just throwing stuff against the wall and hoping it stick. Hey, do your thing, right? But at the end of the day, a lot of people think that money is the most valuable asset. The most valuable asset is time. Time is the most valuable asset because time is what you can't get back. You can always get money back. You can always make more money. You can lose all your money tomorrow and you can make it back. You can always make more money back, but the only thing that you can't get back is time. So at the end of the day, instead of throwing a whole bunch of stuff against the wall, you got to figure out who your distressed buyers are. Because that is your target market. Your target market is distressed home sellers. That is your target market. That is the number one lead. That is your lead right there. There is no other lead. There is no other lead. Your lead is a distressed home seller. There is no other lead. There is no other lead. Not no person, oh, I'm thinking about moving out. No, you need to be distressed. You need to be on hard times. Because the offer that I'm trying to give you, I'm trying to make money off the offer. Everybody, if you're an investor, you make your money off the purchase. And the reason that I tell you that is because the main thing that we look for, let me rewind it. If you haven't watched my last episodes, my name is CJ James, Calvin CJ James. I am the founder of Grandiose Capital. We are a brokerage. We broker hard money, private money to real estate investors. We have access to funds. We have access to home offices. We have access to lenders. We have access to gap funding. We have access to it all. We have access to business funding. We have access to it all. And we get deals funded. We don't play games. We don't play with customers. If we pre-approve a deal, you best believe it's going to get to the finish line and you're going to get your money from us, right? But the main criteria that we look at is it a good deal? That is the main criteria that we look at. That is the number one criteria that we look at. Is it a good deal? Matter of fact, the better the deal, the easier it is to get money. Ain't that crazy? The better the deal, the easier it is to get money. And I'm starting to see a lot of deals come on my desk and they don't have a lot of margin. They don't have a lot of room in the deals. The deals are real light and thin. How you gonna make money on a light, thin deal? Why you buying it for so high? If the deal is light and thin, what I look at is, the seller won. The seller won that interaction. Let's go back to the theme of this video. The theme of this video is win. I want all the investors watching this channel, all the people that's watching this channel, I want you to understand that your number one priority is to win. Not to participate, not to tell people I'm a real estate investor. No, your number one criteria is to win, because if you consistently win, you won't have no issues with nothing. No issues getting no money, no issues raising no money, no issues finding money, no issues people throwing money towards your deals. Guess what? And you give yourself less risk. The lower you purchase the asset, in this case, we're going to talk about a home. But it could be an office building. It could be whatever. You know what I mean? We're just going to call it asset. Let's just bring it down to home, right? Let's say the home, right? The lower you buy that house for, the lower your risk is. The higher you buy that house for, the higher your risk is. They work together. Low price? Not price. Because some of y'all think every low price deal is a good deal. That's not true. Just because it's a low price deal, that don't mean you got a high ARV. You could be in the wrong neighborhood. No matter what you do to it, you can't get it over an ARV. So we're not going to say low price. We're going to say low value. Nah, I don't even know if I want to use the word value. Whatever. We're going to use the word, because it's not always about the price. It's about what it's actually worth, right? Nah, we just going to call it this. We're going to call a spade a spade. Low offer. The lower your offer, the lower your risk. Simple. The higher your offer, the higher your risk. Why do I bring this up? because I see deals on my desk every single day. And the only reason that deals don't work is it wasn't a good enough deal. Point blank, period. It is that simple. And when I say a good deal, the numbers are pretty straightforward. I mean, everybody that's in the real estate space should have a good idea of these numbers, right? So for my fix and flippers, it's called my fix and flippers. If you want to get approved for a fix and flip loan, I mean, we can approve any loan. I'm talking about like a good approval with the least amount of money down. The ARV is the number you want to focus on. And then you also want to focus on purchase price and rehab. And in an ideal situation, you want to do purchase price plus the rehab. You want that to be a percentage of the ARV. I mean, there is no such thing as too low of a deal. The percentage can be, anything, right? It can be anywhere from 0%, right? You know what I mean? If you get the property for free, low risk, right? So, but let's just say 60%, right? 60%. Very few people can get under 60%. If you get anything less than 60%, you're a rock star. Good job. Great job. You'll have no problem raising money for that deal. Anything less than 60%, you have no problem at all raising that deal. Most people can't get under 60%, so we'll just say no higher than 75%. If you can do higher than 75%, but you ain't gonna make no money, not no real money. Your job, you're an investor. Your job is to make money. Your job is to unapologetically make money. Okay? Don't be trying to nickel and dime the money man and the real estate agent. You need to nickel and dime the seller. That's what you need to be nickel and diming, right? So, purchase price, rehab. If you add these numbers up, you want them to be, it can be as low as possible, but let's just say, anywhere 60% is a great deal. 60% and less is what we'll call a great deal. This is called an okay deal. Okay, 75% is okay. You want to be great. If you get lower than that, lower than 50%, excellent. Purchase price plus the rehab, you want it to be less than 60%, 60% or less than the ARV. What is the ARV? After repair value. That means after it's fixed up, what is it going to be worth? After you fix up the property, what is it going to be worth, right? So that's the point that I want to stress today, because that is the most important thing. The most important thing is you got to find distressed buyers, because in order to hit those numbers, this person has to have some sort of urgency. They have to have some sort of pain. They have to have a problem that needs to be solved by you, the investor. They have to have a problem. They have to have something. They have to have some pain. They might not disclose that pain to you, but if you get it for 60% or less, you best believe there was some pain there. They might not disclose it to you, but you best believe there was some pain there. If you get it for 60% or less. And it takes skill, and it takes a winning mentality, and it takes effort, and it takes, it takes a lot of knocking on doors, because you're looking for distressed buyers, right? And a lot of times, you can see telltale signs of a distressed buyer by negligence. Is the yard net cut? Is it look like it's vacant? Do it look like nobody want to be there? Do it look like, you know what I mean? Probate. Somebody died. Nobody wants the house. That's where you scoop in. You get low ball offer. You know what I mean? Don't be afraid to do low ball offers. Don't be afraid to make your money, because that's what you jumped into business for. You jumped into business to make money. That's what you jumped into business for. Now that's for my fix and flippers, right? Hopefully y'all understand those numbers. If you don't, that's very easy to look up online, YouTube, everywhere. Those are very easy numbers to look up. Purchase price, rehab budget, ARV. Very easy to look up. If you get it for 60% and under, it'll be easy finding money for those deals. 65% and under, easy finding money for those deals. 70%, easy. We can do those. We can do up to 75. We can do we can do deals, but I'm just for your ideal deal for the least amount out of your pocket. 65% and under. If you want to be an investor, 65% of ARV and under for the least amount out of your pocket. Okay, for my people who like to buy just straight rentals, they don't want to fix them up. They don't want to do BRRRR. They don't want to do nothing, because that fix and flip model that I just showed you, that works for the BRRRR method as well, because you got to fix and flip it first before you refinance it. So my people that buy straight rentals, if you want an approval for the highest, because we can approve pretty much, we approve a lot. You know what I mean? Our criteria is very slim, very easy. That's why people get money from us all the time. We have private money, we have hard money, we have funds, we have family offices, we have it all. So basically, for the highest LTV, if you want approval for the highest LTV, you want the rent, the collected rent, plus insurance, plus taxes, and this is monthly. We'll just put monthly. You want all of this to equal to 10% or less than the mortgage. That's it. You want to get approved from us? Get a rental. Look at the market rents, the rent that's being collected. If the rental, if the rent that's being collected plus insurance plus taxes is 10% or less than the mortgage, you'll get approved for the highest LTV with us. I mean, obviously, there's a couple other things we're looking to, but obviously, you know what I mean? You got a deal. It's easy. Grandiosecapital.com. www.grandiosecapital.com. Hopefully, they got a link somewhere in the description. www.grandiosecapital.com. If you need a quote, you got a rental, whatever the case is, we can get it quoted for you. But for the ideal situation, for the highest LTV, people's like, what is LTV? This is called leverage. I'm just playing. That's not leverage. That's a loan to value. Loan to value. So basically, LTV is loan to value, a percentage. I mean, we go up to 80%. So for rentals, we go up to 80%. For fix and flips, we go up to 90%. So 80% for rentals. We go up to 90% for fix and flips, but 80% is the highest we'll do for a rental. So basically, if you're buying it for, let's use numbers, 100K, 80% of that is 80K. What does that mean? That means we'll lend you 80K. You're responsible for the 20K. You can borrow the 20K. We don't care. We got gap funding. You can borrow the 20K. We don't care where you get it from. You can get it from your friend, family. You can raise it from another investor. We don't care how you get it, but we ain't gonna give you the 100%. We ain't gonna give you the 100%. We're gonna give you 80K. You know what I mean? We're gonna give you 80%. You're gonna have to find the 20%. You're gonna have to have some skin in the game. You know? But at least you get the majority. At least you get the majority of what the property costs. You gotta have some skin in the game. Okay. Rental. In order to get approved for the highest leverage, you want the rental income, the insurance and taxes to be 10%, to be at least 10% more than the mortgage. At least 10% more than the mortgage. You want it to be at least 10% more than the mortgage. So let's say the mortgage is $1,000. 10% of 1,000 is 100. 1,100. That means collected rent, insurance, and taxes should be at least 1,100 a month in order to qualify for the highest leverage, which is 80% in this case. So that's what I meant. So like for example, if this was 50, if the taxes were $50 a month, insurance was $50 a month, you know what I mean? Then the collected rent in this scenario would have to be a minimum of $1,000 in order to get approved for the highest leverage. It can always be more. I'm just saying that's the minimum. That's the minimum to get approved for the highest leverage. You can have less, but then your leverage will drop. You can collect less rent, but the leverage will drop because the mortgage is gonna have to be 10%. I mean, the rent collected is gonna have to be 10% higher than the mortgage. So the mortgage will drop because you're not collecting enough rent. So that's a good rule of thumb. I mean, that's across the board. That's pretty much everybody does that. So that's a good rule of thumb to know when you're out here trying to buy rentals. This is for my rental buyer. You want to be positive, and that's how we approve loans. That's how we don't do, income verification, all that crazy stuff. We don't call your employee. We don't do none of that stuff because at the end of the day, the thing that matters is, does the rent cover the mortgage? Is the person who's paying you to rent your house or condo or whatever you have, your asset, are they paying more than what the mortgage on that asset will be? So that is it in a nutshell. Today's video, I wanted to make it very short, simple, to the point. I really want to stress the importance of finding the right seller. Stop making every seller an offer. Not every seller is your ideal client. Your ideal client is a distressed seller. Somebody who is either dying, sick, broke, something wrong. You know what I mean? Something's going on. They got to move. They got to leave quickly. They need speed. Something happened. You know what I mean? Somebody lost their job. I mean, you looking for the worst of the worst. You know what I mean? They don't even know how they got the house. They got the house by the skin of their teeth, and you come in and you save the day. You save the day. You help them before the bank takes their house from them. You help them with your lowball offer. You take that mortgage off their hands. You save them from themselves, from them past sales for buying that house, and they do however they got it in their situation. So I want to keep today's video short and sweet. Thank you guys for tuning in. I really wanted to break this into you investors because I'm getting some deals come through and they just ain't good deals. And this is the best time to get a good deal because when there's blood in the water, the sharks must eat. You know, these are the times to make those lowball offers. Stuff is about to hit the fan. And this is where you need to step in, and this is where you need to step up, and this is where you need to get after it. Look for those distressed home buyers. Keep your business running. Keep your business alive. Your business is to buy houses and assets for below their value, significantly below their value if you can help it. Make those lowball offers and make them with a smile on your face, because you might think you're making a lowball offer, but the person that's distressed, that needs that offer, thinks you're their savior because you are. It's all about mindset, y'all. And if you need some money from me, if you need a quote from me, www.grandiosecapital.com. That is the company that I'm the founder of. I do this in order to help educate as many people when it comes to the private money, hard money side of things. And when it comes to, basically getting the confidence that's needed to actually partake in this asset battle. As everybody knows, single family homes and asset and land is some of the best assets. It's some of the best, if not the best asset that you can own in the United States of America. Just make sure you buy it for the right price. Peace.